Hello, I am Maria Cristina Amor Tangkay, and I will be discussing about the train law. So, the train law is an amendment to our old tax system, which is the National Internal Revenue Code of 1997. On December 19, 2017, President Rodrigo R. Duterte signed into law Package 1 of the Comprehensive Tax Reform Program, also known as the Tax Reform for Acceleration and Inclusion, or the Train Law, as Republic Act number 10963. So this law took effect on January 1, 2018. The train aims to make the Philippine tax system simpler, fairer, and more efficient. So here we have a certain provision. As you can see, the table provided here is the new graduated tax rate. So before, in the old tax system, we observed personal exemption amounting to 50,000 pesos extending to all individuals and additional exemption for qualified dependents, not a senior citizen, but legitimate and illegitimate child up to 4. 25,000 pesos per child. So you have a discount of 100,000 pesos if you have 4 and up children. So discount yun pag nagbabayad ka ng tax. But in our new tax system, which is the train law, all have been removed for the purpose of simplification and easy monitoring on our tax administration. So, wala nang pakialam kung ilan yung anak nyo. As long as you are earning 250,000 below, you are exempted in the tax. The primary purpose of the government kung bakit sila nagbigay ng 25,000 pesos na discount per child is that tulong na nila yun sa mga newlyweds na naghahanap pa lang ng matitirhan or kakasimula pa lang ng family. Pero dito sa ating new tax system, which is the train law, no more exemption of having kids. So, yun. Now, let me give you an example scenario about dyan sa ating new graduated tax rate table. So, what if yung sweldo mo every year is 240,000 pesos? Magkano babayaran mo na tax doon? Base dyan sa ating new tax rate table, wala kang babayaran. Kasi, lahat ng mga sumusweldo ng 250,000 and below, exempted siya sa tax. So, paano naman pag 300,000 pesos yung sweldo mo every year? So, yung first na 250,000 pesos, exempted yun siya. And then, isolve mo yung excess ng 250,000 pesos, which is 50,000 kasi 300,000 minus 250,000 equals 50,000. Yung 50,000, i-multiply mo yon sa 20%, which is 10,000 pesos. So, yung 10,000 pesos, i-add mo dun sa first na exemption, which is 0. So, yung babayaran mo lang na tax is 10,000 pesos. So, paano naman pag 1,850,000 yung income mo annually? So, paano naman i-compute? So, yung first na 800,000 doon is 130,000 pesos lang yung babayaran mo na tax. And then, yung excess, which is 1,050,000, i-multiply mo sa 30%, which is 315,000. So, yung 130,000, add mo dun sa 350,000, yung total na babayaran mo every year na tax is 445,000 pesos. Some other objectives of train law is to promote investments, create jobs, reduce poverty, raise revenues for the Build program that will sustain high inclusive growth of the country, and to finance investment in people through enhanced education, health, and social services. Let's proceed to the affected area of train law. So first is the tax on sweetened beverages. Yung mga juice, mga soft drinks at energy drinks na may mga sugar, yun yung mga dinagdagan ng VAT. So dati 'di ba, yung soft drinks natin tag 12 naging 20. Yung 8 pesos na 8 o'clock naging 16. Ayun, mas naging mahal na. And then sa excise tax on fuel and automobile. Yung sa automobile naman, may lacking dito kasi sabi nila, pag bumili ka ng under ng 1 million pesos na sasakyan, mas malaki yung excise tax na babayaran mo kaysa pag bumili ka ng luxury cars. So, bago napatupad ng 2018 yung yung train law, marami nang bumili ng sasakyan kasi takot sila na magbayad ng mas malaking excise tax. Pero yung reason naman ng government kung bakit nila ginawa to kasi pinipigilan nila bumili ang mga tao ng mga sasakyan kahit di naman kailangan, lalo na dun sa Manila or sa mga syudad. Kasi 'di ba mas lalong ta-traffic pag madami masyadong sasakyan. So, next is the estate tax and dun sa donation or pamana sa estate tax. Halimbawa, 'di ba sa mga rural areas maraming mga tagapagmana na walang pambayad ng tax. So, paborito sa kanila. Kasi 'di ba yung land is nag-a-appreciate siya, hindi siya nagde-depreciate sa accounting. Yan lang yung assets na hindi nagde-depreciate kaya mas lumalaki yung value niya every year kasi lupa yan, 'di ba? So, dati 20% yung babayaran mo na tax. Ngayon, 6% na lang. At saka dun sa mga nagpapamana ng pera pero namatay na yung magpapamana, hindi pa niya nabigay yung pera, hindi pa na-withdraw yung pera sa bangko. So, yung mga magmamana ng pera, wala pang perang pang bayad dun sa tax. Kaya hindi nila makuha yung pera sa bangko. Yan yung dati. Pero ngayon, pwede nyo nang i-withdraw yung pera ng namatay. Magbabayad ka lang ng 6% tax. Next is yung sa tax sa sigarilyo and then sa coal and cosmetic surgery. So, itong sa tax on cosmetic surgery, bago ito, no? Dati walang tax yan. Ngayon, nilagyan na nila ng tax. Pero yung problema ng mga tax collectors dito is paano nila mamomonitor yung mga naging pasyente ng doktor. Paano nila mamomonitor kung ilan na yung kailangan nilang i-tax? Kasi 'di ba may mga non-disclosure contract yung mga doctor tsaka customers nila kung sino yung mga nagparitoke sa kanila or something. So, yeah, mahihirapan daw sila dito. Last on the list is the sale of drugs and medicine for diabetes, hypertension, and high cholesterol. So, itong amendment na ito is expanding the benefit of senior citizens. So, now you don't have to be a senior citizen to avail the VAT exemption. So, dati, yung mga senior citizen lang yung may VAT exemption. Ngayon, lahat na ng mga bibili ng mga gamot sa diabetes, hypertension, and high cholesterol. So, ang tanong dito, sino makaka-benefit dito? Yung customer lang ba na bibili niyan, or pati yung mga supply chain, yung sa mga manufacturer, wholesaler? Ang sagot dyan is yung customer lang na bibili ng gamot, yung may reseta. Yun lang yung makaka-benefit dyan. Yeah. So, in conclusion, the amendment on the law is pro-income, pro-health, and pro-poor. So, paano siya naging pro-income? Kasi bago pinatupad yung train law, minimum wage earners lang yung exempted sa tax. Pero ngayon, yung mga 250,000 pesos annually yung sweldo is exempted na din sa tax. And then, paano naman siya naging pro-health? Kasi, dati senior citizen lang yung mga may VAT exempt pag bumibili ng gamot. Pero ngayon, lahat ng mga may reseta na bibili ng mga gamot for diabetes, hypertension, and high cholesterol. Paano naman naging pro-poor? Naging pro-poor kasi 30% ng mga malilikom ng gobyerno galing dito sa ating tax is mapupunta sa mga mahihirap, mga proyekto sa mga mahihirap. At saka yung 70% na matitira is mapupunta naman sa build program ng ating presidente. So, that's all for the train law. Let's proceed to the create law to be discussed by Miss Nikki Tanod-Tanod.
I am Nikki Tanod and I will be reporting the overview on Create Law. On March 26, 2021, the President, Rodrigo Roa Duterte, signed into law Republic Act No. 11534 or the Create Act, which is the reconciled version of the Bicameral Conference Committee. It settled the disagreeing provisions of House Bill No. 4157 and Senate Bill No. 1357. The CREATE Act was previously known as the Corporate Income Tax and Incentives Reform Act Bill. The law became effective on April 11, 2021. The objectives of CREATE law. In response to the COVID-19 pandemic as a fiscal relief to domestic and foreign corporations doing business in the Philippines. Lowering of taxes in case of economic breakdown due to the pandemic. Because of COVID-19, the country experienced economic breakdown because of businesses were forced to stop operating temporarily due to the health measures for COVID-19. With COVID-19 crisis, fundamental changes in consumer behavior, supply chains, and routes to market are knocking companies off balance. In response to this issue, the government amended the new tax law, which is the CREATE law, for the purpose of granting tax relief for companies in financial needs because of pandemic. The law provides a wide range of provisions aimed at reducing the COVID-19 burden on both foreign and domestic companies. The CREATE Act amends Republic Act No. 8424 or the National Internal Revenue Code of 1997 as amended with the following salient provisions. First is reduced corporate income tax. The CREATE Act lowers the corporate income tax rate from 30% to 25% beginning July 1, 2020. Where the corporation's net income does not exceed 5 million pesos and its total assets do not exceed 100 million pesos, excluding land where the business is situated, the tax rate shall be 20%. For non-resident foreign corporations, the tax rate shall be 25% beginning January 1, 2021. Next, proprietary educational institutions and hospitals. The applicable income tax rate for proprietary educational institutions and hospitals shall be 1%, which was previously 10%, imposed on their taxable income beginning July 1, 2020 until June 30, 2023. Next is minimum corporate income tax. The MCIT shall be imposed at the rate of 1%, which was previously 2%, beginning July 1, 2020 until June 30, 2020. Next is regional operating headquarters. Regional operating headquarters shall be subject to the regular corporate income tax, which is 25%, beginning January 1, 2022. Next is capital gains tax. The capital gains tax from the sale of shares of stock not traded in the stock exchange shall be 15% for both resident and non-resident foreign corporations. Value-added tax. Value-added tax or VAT exemption of medicines. The VAT exemption on the sale of importation of drugs and medicines for cancer, mental illness, tuberculosis, and kidney diseases shall begin on January 1, 2021. Next is VAT exemption of medical supplies and vaccines. The sale or importation of equipment and raw materials for the production of personal protective equipment for COVID-19 prevention and all drugs, vaccines, and medical devices used for the treatment of COVID-19 shall be VAT exempt beginning January 1, 2021 until December 31, 2023. Tax on VAT exempt persons. VAT exempt taxpayers whose gross annual sales do not exceed 3 million pesos shall be subject to 1% tax, which was previously subject to 3% percentage tax on their gross quarterly sales or receipts beginning July 1, 2020 until June 23, 2023. Incentives for critical exporters and domestic market enterprises. An income tax of 4 to 7 years, depending on location and industry priorities, followed by a special corporate income tax rate of 5% based on gross income earned or enhanced deductions for 10 years, shall be granted to export enterprises. Furthermore, such enterprises shall be granted duty exemption and VAT exemption on importations and VAT zero rating on local purchases. Additional incentives for registered enterprises in areas recovering from armed conflict or major disasters. An additional 2 years of income tax holiday shall be granted to projects or activities of registered enterprises located in areas recovering from armed conflict or major disasters. So example of this is when the Marawi City experienced armed conflict. So they experienced economic crisis. They were given an income tax holiday for them to be able to recover from the effects of the armed conflict. Next is additional incentives for relocation outside the National Capital Region. An additional 3 years of income tax holiday shall be granted to registered projects or activities prior to the effectivity of CREATE or under the incentive system when such entities relocated from NCR. For second classification, the income tax holiday period shall only commence at the completion of the relocation of operations. Let's forward to the actions to consider. Taxpayers are encouraged to understand and consider how the provisions in the CREATE Act will affect their businesses and how such measures can help them restart and recover from the effects of the COVID-19 pandemic. Regulations will be issued to implement the changes introduced under the CREATE Act. Since the CREATE Act was amended in the response for COVID-19, so the taxpayers, business owners specifically, should look into the benefits they could get and the tax exemptions granted by the government in order for them to adjust completely to the economic crisis and for them to be able to start over again. So that is the end of my report, the overview on CREATE law. Let's move forward to the next topic, kinds of taxes, which will be reported by Genesis Kia Sariol.
Hi, I am Genesis Kia Martini Amsaral, and today my report is about the kinds of taxes. We're gonna start with the most familiar, which is the income tax. So, income tax is being levied by our government to its citizen. So, this kind of taxes arises from the income, business, profits, properties, and a sale from a trade. Second is the donor's tax. A tax is being levied from a gratuitous transfer of donation or gift of a property between parties who are living at the time of the transfer. So basically, a transfer of properties from a living person to another living person without considering the money or the money's worth of a property. Next is we have the estate tax. Unlike the donor's tax, which is a transfer between two living persons, estate tax is a transfer of property of a deceased person to its heir. Next is the VAT or the value added tax. So VAT is a kind of indirect tax collected in every sale transaction of a taxable goods, properties, and service. One example of a value added tax is when you look into your receipt, you can see there at the bottom that a VAT or a value added tax is added to your total. It means that you just paid a tax on the goods that you just purchased. Next is the CGT or the capital gains tax. Capital gains tax is being levied on the profit of a seller from a sale of a real property located in the Philippines. Next is the excise tax. The excise tax are being imposed on a specific goods, service, and a activity. So these kind of taxes are being levied on the manufacturer, the retailer, or the consumer depending on a specific tax. We have the documentary tax or the documentary stamp tax. So this is a tax on documents, instruments, loans agreements, paper evidencing acceptance, and the sale of transfer of an obligation. A tax is being paid by the person making or signing the documents.
Before we end this session, let us give you a summary. Taxation is an inherent power by which the sovereign state imposes financial burden upon persons and properties as means of raising revenues to finance necessary state expense. Taxes are a compulsory contribution of all citizens. The primary source of policy and taxation is the Philippine Constitution. Taxation in the Philippines was introduced during colonial Spain. The train law is the first package of the CTRP envisioned by President Duterte's administration and started its implementation last January 2018. Train law was designed to change and correct the complex and unjust old system of taxation to more simple, fair, and efficient for all. Through train law, every Filipino will contribute to fund the various infrastructures and social services of government geared to dissipate poverty and inequality. During COVID-19, Kuwait law was signed into law and took effect on April 11, 2021. And lastly, there are different kinds of taxes, and these are income tax, donor's tax, estate tax, value-added tax, capital gains tax, excise tax, and documentary tax. That's all for today. Thank you for listening and God bless us all.